The runes are clear this morning. Listen, it is Monday, the 10th of August, 2026. Late Friday, the company that sells the shovels for this entire build-out stopped long enough to buy the mine, and the mine it bought was built to hash Bitcoin. Start with the anchor. As of 5:15 this morning, Eastern, Bitcoin trades at 65,200, up about 0.6% on the day, and roughly 3% on the week, off the 1st of August, low near 62,200. Our engine carries it green, standing with the broad market, the Nasdaq and gold, and the regime reads risk on and pointed up, with stocks leading on our read of the InvestAnswers Decision Support System. One red anchor remains, and it is the same one that has stood red since Thursday, the long bond. The alert tape belonged to a single asset this weekend, Solana, which turned its optimized trend green Friday evening, printed mean reversion overbought twice yesterday. Once at 8 in the morning Eastern, again at 8 in the evening. Same signal, same coin, 12 hours apart, and it trades at $77. Understand that shape. A trend flips up, and inside 48 hours, the move has run far enough to be flag stretched, twice in one day. That is not the model doubting the trend. It is the model measuring speed. A thing that goes green and immediately sprints has borrowed from its own future. Mark it. Do not chase it. Now to Friday, and the transaction that tells you where the real scarcity has moved. The information reported Friday that NVIDIA will invest up to $3 billion in a Texas company called Lancium, $2 billion upfront for roughly 20% of the business, a further $1 billion contingent on hitting grid interconnection milestones, valuing a portfolio of power and land near $10 billion. Hold the terms loosely. The reporting was corroborated across several desks inside a day, but neither company had confirmed it as of the weekend. Hold the shape tightly. NVIDIA does not have a chip problem. It has roughly $500 billion of bookings and the best margins in the industry. What it has is a delivery problem, and that problem is not made of silicon. It is made of substations, interconnection queues, and the years it takes to energize a campus. So, the company that sells the scarcest manufactured good in the world just spent its own balance sheet buying equity in something scarcer still. Not a supply agreement, not an offtake contract, ownership, and it was not alone in the week. On Thursday, the fiber operator Zayo announced better than 8,000 miles of new long-haul route, with NVIDIA named an early customer, laid specifically to reach compute being built where the power is, rather than where the cities are. NVIDIA closed Friday at $224, within reach of its record. Now, the part meant for this Warband in particular. Lancium was founded outside Houston around 2017. It built the technology that lets an enormous flexible load register with the Texas grid as a controllable resource, power that can be shed in seconds when the grid wants it back. In June of 2020, it qualified the first data center in Texas history to hold that status, and its first campus, 325 megawatts, groundbroken at Fort Stockton in September of 2021, was a Bitcoin mine. Then the halving of 2024 cut the block reward in half, on schedule, exactly as written. Mining margins compressed. The company pivoted. By July of that year, it had partnered with Crusoe on a 200-megawatt artificial intelligence campus outside Abilene. That 1,000-acre site is now Stargate 1, engineered for something near 400,000 NVIDIA chips. So read the line all the way through. Bitcoin miners invented the business of turning stranded and curtailable electricity into money. They proved the model, ate the losses, wrote the software, and qualified the interconnects, while the analyst class called it a waste of power. Then the reward halved. The weakest operators were squeezed out, and artificial intelligence walked in and bought the playbook at a $10 billion valuation. Do not hear that as a defeat. Hear the mechanism underneath it. Bitcoin does not have to win an auction for electricity. When power gets bid away, hash rate leaves, difficulty falls, and the operators who remain go on securing the same 21 million on cheaper terms. No board meeting, no capital raise, no rescue. This network answers a lost bidding war by lowering its own cost of production automatically every 2 weeks. Every other bidder on that grid has to go out and find $3 billion. Now to the ledger, and a change in who is actually doing the buying. You already know the American spot funds had their best week since April. Here are the two numbers underneath it that nobody put in a headline. Wallets holding between 1,000 and 10,000 coins added roughly 40,100 Bitcoin from late July into the first days of August. Call it $2.6 billion. The share of large holder flow moving toward exchanges fell to 0.36, with 5 consecutive sessions of net whale buying. Large direct accumulation, running quiet underneath a tape that has felt like nothing but chop. And the number on the other side of the book. Corporate treasury companies other than Strategy added roughly 1,000 coins across the trailing 30 days. 1 year ago, that same cohort was absorbing 69,000 coins a month. That is a 99% collapse in a bid this market spent all of last year treating as permanent architecture. Strategy itself has not added since late June, and nobody has stepped into the gap. So the buyer changed identity, and almost nobody announced it. The marginal coin of 2025 was bought by a public company issuing stock to buy it. The marginal coin of today is bought by a fund taking a subscription, or by somebody very large moving coins into cold storage and leaving them there. That matters because those two bids fail in completely different weather. A treasury company's bid depends on its own share price, staying above the value of what it holds. That is a leveraged bid, and leveraged bids go quietest at exactly the moment you need them loudest. A holder with keys needs nothing from anybody and can simply wait. Conviction is the only edge that compounds. One last thing, and it is a small defeat worth respecting. On the 24th of July, Starship's upper stage came down in the Indian Ocean in what the company called its softest splashdown ever, intact and floating, after deploying 20 next-generation Starlink satellites on a suborbital arc. For the first time, there was a flown ship in the water to collect. They sent 2 tugs and a recovery vessel. On Friday, Musk said the recovery is, in his words, not looking good. The sea is winning, and notice how little that costs them. They already have what they needed. Close-up photography of a heat shield and an engine section that genuinely flew through re-entry, taken before the tow began losing. The steel was never the product. The data was. Flight 14 is targeted for late this month, and that is the one that counts. The first attempt at full orbit, operational satellites deployed for real, and a catch of the upper stage back at the tower. One line of color on Tesla, and I hold it loosely. Owners and trackers began reporting yesterday that version 14.1 Lite, a distilled build of the newer driving model, is reaching hardware 3 cars, and that is tracker chatter rather than a company announcement, so I'm not building anything on it until Tesla says so in its own voice. Carry this into the session, Warband. Wednesday at 8:30 brings the July inflation print, and it will set the tone for everything on this board. But hold the week's real lesson beside it. On Friday, a chip company paid $2 billion for a fifth of a business that began life as a Bitcoin mine because the one input it cannot manufacture is electricity. Every participant in this build-out is competing for the same physical ground with borrowed money on a clock set by shareholders who want results this quarter. Bitcoin competes for none of it. When the power gets expensive, it simply becomes cheaper to secure and goes on producing exactly what it was always going to produce. This is Warband as a service, Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Until tomorrow, hold the long horizon. Skål!